How should we interpret the market after the Bitcoin rally? If you're interested in knowing more about this, please keep watching. Bybit is one of the best exchanges I've ever used. It provides great market depth, a smooth user experience, and an impeccable interface. Now, by clicking the link below and completing a KYC process with a $100 deposit, you will instantly receive a Bitcoin contract position worth $1,000. Simply click the link, deposit $100, and complete the KYC process. You can then choose whether to go long or short, and the position will be opened for you. You can check it in your account. Now, let's get back to the Bitcoin market. Yesterday, I believe you saw this. We have been discussing this support level in white is extremely critical. If we want to take a bearish trend position, we need to confirm that this white line has been broken downward. What's a confirmed downside breakout? When it breaks below, we need to have significant volume. For example, at that time, how did we confirm the actual breakthrough and enter the market? It was because, at that time, in this area, there was indeed resistance. However, when it broke, you can see that there was a significant increase in volume. And subsequently, the bullish volume completely dominated the market, without giving the bears any chance. It was obvious that the bulls were stronger. So, this breakthrough was effective. Similarly, at this point, we can see that if it breaks below, and the bearish volume has a significant advantage, we can confirm that it is a true downside breakout. However, you can see that the volume here, if we look at it this way, doesn't seem to be very significant. And we can now confirm that this was a false downside breakout. We can now confirm it. Why? Let's take a look at the combination of these two candlesticks. One bearish candle and one bullish candle. The bearish candle on the left has a very long body and a short lower shadow. As for the volume, it's basically not much different from the previous one. However, if you look at the volume on the right-hand side, the latest volume we just received, you'll see that its real body completely engulfs the bearish candle on the left. Both in terms of the shadows and the body, it engulfs the bearish candle. This is known as a bullish engulfing pattern. And in terms of volume, it completely overwhelms the bearish candle. This indicates that the bulls are fully in control of the market. Therefore, this downside breakout is definitely not a true downside breakout. Or in fact, even without significant volume, it can still be valid. However, we need to confirm the presence of consecutive candlesticks closing below the white line. For example, after the downside breakout, although there wasn't much volume, let's say it was comparable to the previous volume, but in the subsequent candlesticks, many of them closed below this white line. We can also say that this confirms the downside breakout. However, in this case, we can conclude that it is a false downside breakout. It is not a true downside breakout as we initially thought. At this point, if you have opened a bearish position based on the trend, you must exit when it returns to this white line. From yesterday's market movement, we can also infer one thing. We must rely on technical analysis, because we cannot rely solely on the news to determine our trading decisions. It is indeed important to stay informed about news, and we have shared some news with you as well. However, relying solely on the news for trading is not feasible. For example, during this drop, everyone knows that it happened because Binance and Coinbase were sued by the US SEC. However, we cannot know this news in advance. By the time we become aware of the news, the market has already moved 50 to 60% or even 70 to 80%. Chasing the market at that point doesn't have much significance. Moreover, regarding the recent pullback, you may attribute the decline to the news of Binance and Coinbase being sued in the United States. However, when it comes to the rally we witnessed, what news was it backed by? We are uncertain about the underlying news or factors driving it. We simply cannot know in advance why the price surged. So, in trading, we must rely on technical analysis. In technical analysis, if we analyze the short-term period, we can observe the bullish momentum starting to rise above previous resistance levels, accompanied by an even greater volume compared to the bearish side. At such a moment, we know it's time to exit the trade. But if we rely solely on the news, we cannot access this information or determine the appropriate timing for such actions. The information would be delayed as well. Now, let's return to our original perspective. The downside breakout we mentioned before actually occurred faster than anticipated. I initially expected the potential downside breakout of the distribution range above us to happen at the end of this month and into the beginning of the next month. Why? It is because we need the entire pattern to complete before the downside breakout occurs. Why do I say this? If you look at the time spent oscillating in this range and the cumulative volume, it took 81 days, a significantly long period. Moreover, the accumulated trading volume reached 1.069 million bitcoins. Now, compared to the lower range, where 1.6 million was accumulated, we still need an additional amount. Approximately 0.5 million, right? Half a million. So, with an accumulation of 1 million over 81 days, it would take around 30 to 40 days to accumulate another 0.5 million. 30 to 40 days from now. Meaning the earliest time for the downside breakout here would be the end of this month. And at the latest, the beginning of the next month. Based on the current market conditions, the market has moved from the accumulation phase, at the bottom of the bear market, to a breakout and subsequent bullish run. After the small bull run, it has entered a distribution phase at the top. We can compare this pattern to the previous one. Let's see. Last time, we also had a descending triangle pattern. And ultimately, the price broke down from that pattern in this area. A pattern rarely reaches its conclusion before changing direction. But the previous small bull run was different. The time and volume accumulations in the lower range are similar to this pattern. After the downside breakout, we experienced a period of bearish market movement. Although there was a sudden surge in between, due to certain news events, the overall market sentiment and trend have not changed. The underlying bearish trend remains intact. You can observe that the bearish trend or structure is maintained, based on a few factors. First, the peaks of the rebounds have been consistently decreasing. Second, the trend line has been suppressing the highs of these rebounds. Finally, when it broke down, the subsequent rebound did not surpass the previous high. As a result, we went through a bearish phase of oscillation and decline. I believe we can apply the same analysis to the current market conditions. Although we have experienced a rally, it does not indicate the end of the bearish trend. It does not. This rally signifies the failure of the downside breakout. But it doesn't indicate a reversal of the bearish trend. Unless any of the previous high points are breached, particularly the recent one around 28,500. The bearish trend is likely to continue. Another factor to consider is the downward sloping white trend line, which still has some distance to go. Based on the current situation, or perhaps we can think the other way around. If we want to go short, maybe when the price rebounds and touches the white trend line, it could be a good opportunity. Also, you can see that hitting support and experiencing a bounce is a normal occurrence. However, the amplitude of the bounces is getting weaker. You can observe that each wave of bounce is weaker than the previous one. So, I still believe that going short at this point is absolutely fine. However, the recent downside breakout is a failure. Since it's a failure, we need to wait for the next opportunity, which will take some time and require further oscillation. Only then can we determine the timing of the next move. Therefore, at this moment, we have to be patient and wait for the trend to develop. Now let's switch to the 4-hour chart. From the 4-hour perspective, we can see that the price is still within the range of this box. The upper resistance still plays a crucial role, as you can see, as well as the clear support level below. So, in the short term, we can consider trading within this box pattern. During oscillation, going long at the bottom, and going short at the top to capture some short-term profits. Of course, if the bounce goes higher, I would indeed consider taking a short position near the trend line, just as we did before, or wait for a downside breakout to add to our trend-following positions. However, we still need to wait for the trend. After all, we just had a failed downside breakout. So we need to wait for a true downside breakout, which I believe will require more time and oscillation. As for considering going long, in the context of this bearish market, I would not consider it. Let's take another look. I've been searching for the reason behind yesterday's sudden surge, and we shouldn't underestimate this explosive move. It was a 10% rally in just one day, which is quite significant. You can see that if we measure from the lowest point to the highest point, it's roughly an 8% increase. It's quite astonishing, especially considering it happened in a single day. I've been trying to find the reason behind it, but I couldn't come up with anything. It wasn't influenced by the US stock market either. The US stock market had no sudden surge but a regular, modest increase. When it comes to trading, the most important thing is still to analyze the market conditions. We should base our actions on how the market behaves. A price surge or decline doesn't necessarily require any news. While often there is news that accompanies such movements, they can also occur without any specific news catalyst. This is where technical analysis becomes most effective in protecting our funds and setting up appropriate stop-loss measures. Alright, thank you. You're welcome. To like and share my videos and subscribe to my channel. Turn on the little bell button to show me your greatest support. Thank you so much. Bye-bye.